Welcome to Ready, Set, Real Estate, where we will help empower and educate you on many different aspects of real estate, finance, and investing. Each week, we will expand your knowledge and uncover hidden truths. We will break down real-world scenarios and study actual how-to strategies. Anyone can buy real estate, but together we'll ensure you make smart real estate investment decisions. Now, here's your host, award-winning author, international speaker, and real estate educator, Lisa Gillett.
Happy Wednesday, beautiful folks, wherever you are on this phenomenal planet. Got good weather today here in sunny California. It is sunny in California. Interestingly, we have weird weather. I'm sure everywhere in the world right now, weird weather's happening. Those of you who believe that they're manipulating weather, I might have to agree with you there, because it rained on, what was it, Sunday? It just came down and just showers pouring down. And then by the afternoon, it was just like all sunny, all good. Some of you are like in places like Atlanta, my native country, where my family's from, Belize, where it rains and then there's sun, and then it rains again and then there's sun. Just, I guess, that bipolar weather folks talk about. I'm not used to that here in California, because I'm just used to planning, right? Is it going to be warm today? I'll dress accordingly. Is it going to be cool? Dress accordingly. Is it going to rain? Dress accordingly. Although here we can probably wear flip-flops, because we don't really get rain where it's ridiculous. And that's a perfect segue as to what we discuss on the show. Real estate here. That's why we've got prime real estate here, is because we have the great weather. 20 minutes from the snow, 20 minutes to the beach. Either way, either direction, you can be centrally located. Okay. I was messing with my zipper here. It was bugging me. My zipper got stuck. Trust you are well. Today we have a great show topic. This has been on my mind, especially because I've got some new clients I'm working with. So I said, you know what? I think it's a good time to revisit this. We talked about down payment assistance a couple years ago. Now we're bringing it back. So if you are new to the show, welcome. Say hi, say hello. Drop a 1 in the comment down below. Let me know you hear. That's 1. Press 1 says I'm here. Press 2 says I shared it. And if I drop anything that is genuine, mind-blowing, do a mic drop for us, okay? So yeah, let me pin this. I'm doing something different on IG today as well. So I decided to go live on the Ready, Set, Real Estate Instagram page. I usually go live on lasuperagent. I'm toggling between these two pages. So I'm going live there for those of you who are connected. Hold on. Watch this, you guys. Hi, Hen, you're on speaker. We're live on the show.
Oh, okay. I'll call back.
Okay, hon. Talk to you later. Bye. That's what happens when I don't put my phone on vibrate. Okay, let's see here. Turn on vibrate. Good. So here we are. Another information-packed episode. Before I jump into that, I want to talk about 2026 goals. We are in second quarter already. Second quarter, good stuff happening here. How are things going? I want to check in with you. Have you checked your credit report? Again, you should, if not already, have an account with annualcreditreport.com. Annualcreditreport.com. They are the only officially approved website to get a copy of your credit report for free. Annualcreditreport.com. Let's throw that up there. There you go. That way you have it. Let me make that bigger here. Boom. Okay, cool. And if you haven't already, it's a great time to check for it now. So you get free credit report from all three credit bureaus, which are Experian, Equifax, and TransUnion. You get it for free. And do know that you won't be able to access the report. So you should set up the account, save your login, your password. If you have issues being authenticated online, like for example, you changed your address and the credit bureaus have an old address, you'll have problems getting authenticated and for them to be able to verify your information. So they will then go ahead and email you a notice or a letter saying, hey, we need this information to verify that it's you so that they can release your credit report to you. Some of you know that you also have access, which is pretty neat. Again, I believe this has been more of a movement in the industry, both banking and with consumer protection. The banking institutions, your depository institutions or credit unions, likely is connected to one of those credit bureaus, one of those credit agencies that gives you access for free. I believe they even show you your credit report. I know I've got my bank, one of my banks, they allow us to access our credit report and it shows what my credit score is. So that's good. I want to talk about credit scores real quick because I get this question a lot. Folks like to say, I know what my credit score is. Can I, download my own credit report and my score and use that for the loan application process as we're discussing purchasing or qualifying for a mortgage? The answer is no. The lenders have to generate that. They use a service that generates your credit score, and they then use that scoring system to determine whether you are eligible or meet the criteria for that, the type of loan that you're applying for. So in short, the answer is no. You won't be able to use that. Do know some of the apps that are not, if it's not Equifax, TransUnion, or Experian, if it's not one of those agencies and you're using like a Credit Karma or some other type of credit scoring app, they are not going to be as reliable as what the lender generates using the credit scoring system. Okay, so using the FICO score, it's not necessarily going to be as close. It'll be off a couple points, and a couple points can make a difference in terms of qualification. But I like it. I like that you are using the apps to monitor your credit score. Do know that credit scores are like stocks. They go up and down. So on a good day, if you're current, if you increase your balance on your credit cards, it's going to affect your credit score and it's going to come down a point. So every day, because I say that because I've got one that's monitoring my credit score, and I get an email every other 2-3 days and says your credit score has changed. Up, down, up, down. So it's almost like stocks are trading. Don't sweat. Don't stress yourself over it. Credit is forgiving. Just know it's a snapshot in time of your financial situation. Okay. If you are essentially borrowing money, that's the snapshot of your credit report showing how much money you're borrowing and how much you're paying back and whether you are diligent in paying that back. That's all that is. If you don't intend on borrowing money, like applying for credit, a loan, car, then credit score and monitoring it and its fluctuations are not that big of a deal. Okay. It does matter when you know you're about to borrow some money from a third party. That's when you should really lower the debt on the credit cards and any revolving balances or credit lines. That's when you need to be on top of that. All right. That's all I'll say for first quarter real estate goals. That's usually the biggest one, is monitoring credit. Again, I trust you're diligent with savings. If you don't have a savings, guess what? Today's show topic is for you. We're going to be talking about down payment assistance and the differences between true grants or a silent loan or deferred loans or shared appreciation. This is really important for you to grasp. A lot of folks come and say, well, I need assistance with, down payment. I don't have it all. That's cool. That's great. It's important to understand which product, right? Which down payment assistance, and I'll say DPA for short. Let's put that in the caption here so we can, DPA for short is going to be our down payment assistance acronym. It's okay if you don't have it, but you've got to have some skin in the game. And that's what I want to talk about. So I'm going to lead with that and talk about having some skin in the game. And this is even inclusive of those of you using VA loans where it's zero down, meaning you can bring no money to the table in terms of down payment. But guess what? There are some other costs involved in the purchase of a property that you should have. I can't front it to you. I mean, I could maybe, but not all of it. Come on. This is for you. It's not for me. It's for you. So I could, but no. So that's something to keep in mind. All right. Before we jump into the meat of this, right? I shouldn't say meat because I'm a vegetarian. In the veggies of this, right? Jump into the jackfruit of it. Jackfruit is the best. We were at a great Indian restaurant and in Fremont, and oh my gosh, it's delicious the way they season the jackfruit. It's delicious. Now I'm on a fast right now, so I'm just like, I cannot wait till this fast is over so I can get back to my good tasting vegetarian dishes. Yeah. Okay, guys, you guys have bared with me. You're patient. Listen, we'll be right back after the sponsor break. Today's episode sponsor is Devenio Estates, a shameless plug. We'll be right back and we'll be talking about more about down payment assistance and the pros and cons and things that you should be aware of before signing on and accepting one of the DPA options. We'll be right back, guys.
We know how challenging it can be to try and sell a home while also dealing with other financial and legal matters. We're here to help. Devenio Estates is the real estate firm you need to make sure your unique situation is handled as quickly and efficiently as possible. Our team of professionals has a combined experience of over 30 years in real estate, construction, and finance industries. As active professionals in the industry, we know the importance of timelines and pride ourselves in providing superior service without compromising integrity. We use industry software and copyrighted proposals so that our real estate agents submit accurate and complete listing information and buyer offers. Our goal is to exceed your expectations and set Devenio Estates as the go-to real estate firm for excellence in advocacy and superior services for our clients. Contact us today to learn more about our services.
Very nice. Very nice. For those of you who are looking to work with a results-driven, client-centered focus real estate firm, look no further. Give us a call. And I share my direct cell here, so you can call me. I actually pick up the phone. I know some folks are like, when you get too important, you're not going to answer calls. Oh, no, I don't know if I see that happening because I just really enjoy connecting with folks. I'm a real person. You are too. And I think it's about connections, the human connection. Yes, with the advent of technology such as AI, it's easy to defer things like answering the call, but I like to be able to field calls and really direct folks, especially when it's in the instance of an emergency situation, like someone passing away, someone facing foreclosure. You kind of don't want to talk to an AI. You want to be able to talk to a live person that can give you some real answers and real solutions, or at least offer some solutions right then and there. And that's essentially what we focus on here with our firm, Devenio Estates. For those of you who are tuning in on our radio podcast replay, I'll drop my number. It's 323-488-3265. Again, that's 323-488-3265. So again, you can call and text if you have any questions or a unique situation that you need answers to. So, very nice. let us jump into, I'll change this back to classroom mode. Down payment assistance, episode 269. Doing really well here on the show segment. We're going strong. We are going strong. 6 years, we're 26, 2017. I believe we kicked off in 2017. So, oh my God, this is 9 years. Next year will be 10 years. Wow. That has gone real quickly. DPA, as I shared, down payment assistance. There are two forms that we'll be talking about today. There are grants and true grants, and then there are those that come in the form of silent loans or deferred loans, and they can be layered financing, meaning you can add multiple layers of down payment assistance where it equates to more than 100% of the purchase price plus costs, which is why you may see the ratios of the loan to value showing as like 106%. More than the purchase amount is because you are borrowing even the cost to close in addition to the down payment. It may be difficult to understand that part when I refer to borrowing more than 100% with down payment assistance programs. But when you have your spreadsheet and you get your borrower's cash to close statement that the lender should be providing to you, it gives you a breakdown of the itemized costs, principal, interest, taxes, insurance, right? Your housing expense costs. And then it will also reference any additional costs, which are the closing costs for the loan. Today, we're just going to focus on DPA. I'll make a note here to myself that next week, we'll talk about closing costs, because oftentimes people are just focused on DPA, down payment, and not the balance to close the deal. You go to a store, you have in mind you're going to purchase a brand new lawnmower. You say, great, I'm going to spend $400, $500. But if you showed up in the store with exactly $500, will they let you walk out the store with that item? No, unless it's kind of like a swap meet or, a yard sale where you're buying it from. But there's that thing called taxes. There's additional fees that go into that purchase. And you need to have not only the funds to purchase the amount. I'm stuttering there because I was thinking about saying the dollar amount. You not only need to have the dollar amount for the item, but also the additional fees such as taxes. In real estate, we call those additional fees closing costs, fees, taxes, transfer taxes. There's loan origination fees, appraisal fees. Again, we'll talk about that next week. That definitely gave me something to talk about as a part 2 to the DPA. So now we'll talk about it. We've already talked about earlier, sometime last year, about commissions. I think I'll revisit this as a 3-part, because as a buyer, you should now have in mind and be planned or prepared to be faced with the cost of down payment, your share of the loan, unless you're purchasing all cash. If not, that means you're financing a portion, right? You bring $3, the lender brings 97. That means they're more vested. In addition to the $3 you brought, and I'm just saying, let's say 3%. Now let's do dollar amount. $100, right? You bring $3, you're borrowing 97 for the full $100. However, when you borrow money, there's additional costs that go into that. So there's taxes, fees, whatnot. We'll be talking about that next week in the form of closing costs. And then the third part to what I'm now creating as a 3-part discussion is we'll be talking about commissions, because now you should also be thinking about how to pay, how are you going to pay your agent, the agent that you hire to represent you. Yes, in fact, we were on a CAR legal webinar yesterday with discussing the new buyer or the changes to the buyer representation agreement. And it's interesting that we're noticing that more buyers are foregoing hiring an agent. They're just not going to hire an agent. And that's because they intend on saving the cost to hire an agent. I don't know if I necessarily would support that, because there's a lot into going into purchasing a property. But hey, who knows? With the advent of technology, you might be able to ask ChatGPT to guide you through it. We certainly have seen, and I had a show discussion about the gentleman who, I believe it was in Florida, who used ChatGPT or AI to help him sell his home. But he still did hire a lawyer to review the contract and make sure everything was covered on that end, at least from a legal aspect. DPA grants. So there are 3 forms here that I'm going to talk about. There may be more, but let's focus on the ones that I see that are common. Nonprofit housing offers down payment grants. Nonprofit organizations, and they come in all forms of nonprofit organizations that offer grants. Banks also offer down payment grants out of their own funds and resources. You likely would have to go through the bank for the mortgage of that property. So they'll want to do the loan, and they will credit you a grant dollar amount to cover either down payment or closing costs, or to buy down the interest rate. You've got to meet the requirements for that bank's grant program. Again, all these, whether it's the nonprofit housing, whether you go through a bank or it's an employer assisted program, there is a criteria in order to access the DPA funds. I like these options because they do show up as true grants. I really do like these options. So they show up as true grants. And what that means, when I say a true grant, that means you don't have to pay it back. There's no, fine line that you've got to read the font 6 down at the bottom that says, hey, we're giving you this money with conditions. And even if they do, it's nominal. It's minimal conditions, such as the grant is to be used for the purchase of your first property, meaning you cannot have owned another property. So I like those conditions. Not only that, but these grants too don't also attach a lien on the property, meaning they attach an interest. The other types of source of down payment assistance that I'll talk about shortly on the next slide, they do attach liens. That's how they secure the funding. So essentially it's a loan. But here, when we talk about grants, it's a true grant, meaning you do not have to pay back as long as you either one, live in the property for 6 months or longer. Some are living in the property for 1 year. One key thing for the DPA true grant money is that you use it for your primary residence. Can't be a vacation home. All right, that's usually one. And of course, you want to reach out to your employer to learn what are their conditions for the employer assisted DPA. They have some, they're good, they're really great. And it's important to understand, when will you have access to the money? Typically, you'll find that the grants will be wired into escrow from the nonprofit organization, or the banks will credit it on the borrower cash to close sheet. You'll see it. It's not actual money you're going to receive in your pocket. This shows up in the transaction, which is why a condition as a basic requirement, and I think it's fair, is they'll want a copy of the purchase agreement of an accepted offer to show that you have a binding agreement to purchase a property, it is your primary residence, and that you are now in need of the funds to be applied towards your down payment, which is your responsibility or your share of cost of the purchase, and the lender then can verify that you have committed to your part, they can do their part. Any questions on that? I think that's pretty straightforward when we talk about DPA grants and true grants. I like those. Those are the ones I lean on. There's some really good ones right now. That is a true grant. They are funding them. There's funds still available, and there's no real, no real leash attached to it. Yeah. Now, the secondary option here for DPA are silent loans or deferred loan programs. Same thing. There are nonprofit organizations that provide this, and they're in the business of doing loans and lending, and they're doing good. And they also, it's part of their business model where they will make money off of the loan that they lent you for down payment. That has to be repaid. And they'll have some conditions and stipulations in there that says, you have to live in the property for 6 months, or the earliest you can refinance and pay it off is 6 months or 3 months, or no time limit at all. It just depends on what the conditions are with the nonprofit organization who is offering the DPA as a deferred loan or silent loan. There's also the housing finance agency organizations, the HFAs, like HALHAFA, that offers down payment assistance. That shows up as a silent loan on the property, against your borrowing, and it's also recorded as a lien on the property. And what that means is they are securing the money they loaned you. They are securing it they are securing the money they loaned you against the property. That's so in the event you decide to refinance or sell that property, they will then recover the money that they loaned you. And it's usually a deferred loan amount, and it has to be paid off. So they make sure they get paid when there's a change in loan terms or ownership. And that's, again, if you refinance or you sell the property. Another example, just talking on deferred loans, another example is a lot of people didn't realize when they took forbearances during the pandemic and they weren't paying on their loans, there was a deferred or forbearance program which deferred the amount that you were not paying. And I've sold a couple properties that had deferred loans, and folks didn't realize that money did not disappear. No, it didn't disappear. The money you still owed was still being added to the principal, and it had to be paid off. So that easily could add up to additional $20,000 to $60,000, depending how long you've not been paying on the mortgage. So it does show up, and that's important. Here's another thing that I also want to point out. When you work with nonprofit organizations or housing finance agencies, we've had to do this before. And I must say, I was really proud that we caught this, because it definitely could affect the equity and the resale value for my client. So sometimes these organizations will stipulate that as a condition of the DPA, they require the property, in the event of being resold, be sold to another low to median income borrower. If you are getting DPA, that typically means you fall within the category of class of a low to median income borrower. Depending on, separate to grants, I've noticed the cap on income is very wide, very wide. So you can earn $300,000 depending on your household size and still get the grant. It just depends. Okay. And again, when you work with banks, banks really like things black and white. What does that mean? They want full documentation. They want it nice and easy where they can document the income. They can document where your money's coming from, that you've been consistently getting that money. And yes, while banks offer DPAs, it tends to be a little bit more stringent in terms of the requirements to get through the loan underwriting and get full approval for that loan. They, of course, come with a FICO requirement as well. As far as working with other organizations, they're a little bit more flexible. They are attached as a secondary, sometimes even a third layer of financing. When a mortgage broker or direct lender is offering their loan product, they can use the Cal HAFA program or the Cal Dream for All. Now, specifically, I should have really broke this out into two discussions under the silent loans. The California Dream for All program is a shared appreciation. So what that means, and that can definitely affect resale value. These programs are not necessarily, and that's what you have to think about in terms of financial planning and long-term for you and your household. When you are deciding to purchase this property, is it long game, long-term for you? Is this your forever home? The reason I ask that question is because if it is your intent, if you foresee that this home in the next 10 years, that is a property you likely will sell, then maybe doing one of the silent loans or deferred loan down payment assistance is not the best. And here's why. Because they do have interest accruing, and or they partake in what is called shared appreciation, which means when the property goes up in value, they also share in the appreciation up to a limit amount. That means whatever profits and gains that you thought you get, you've got to share it with one of these organizations that loaned you the money. That can definitely affect your bottom line and your plans if you decided that you wanted to sell a property where you used a silent loan or deferred loan down payment assistance, and you were counting on, let's say, $100,000 to purchase another property. However, there's the shared appreciation that is affecting the bottom line of upwards of maybe $60,000. They do stipulate that it will never be more than what you are to gain. So they're not going to take more than what you're supposed to get, which is good. But again, it's important to understand the differences and decide which is best for you. Again, oftentimes folks get in the door and they do layered financing and they say, well, I bought my home 100% with no money down. And that's great, except if you intend on taking advantage of maybe the appreciation or equity in that property, because it's not just you. The organization that loaned you the money also is in partnership with you to gain from any appreciation of that property. That also reminds me of another show topic. I want to talk about what's going on in Pasadena with the Pasadena and the organization, the city that used eminent domain. And then they just, I'm going to make notes to talk about that as well. So, guys, you see how show topics just roll off? I start thinking about all this stuff and I'm like, oh my gosh, show topic. We need to talk about it. With that being shared, how are you feeling about this? You've got a grasp, and this is just really basic. Again, if you want a one-on-one regarding your specific situation, you can text me at 323-488-3265. Again, oh my gosh. I just remembered I forgot to do disclaimers. So I'm going to do it now as I wrap this up. The information provided on this show, meaning what I just shared, should not be considered legal or tax advice. Please seek legal and tax advice from those reputable licensed professionals. Of course, you know that. For those of you who say, Lisa said and Lisa told me, just know, I don't know what's going on. This is a podcast. But if you call me and share specifically about what's going on, Then we can talk about specifics. All right. And again, for those of you who were unfamiliar joining us for the first time, thanks for connecting with me. I'm Lisa Gillett, your show host, boutique owner, Devenio Estates, also known as super agent. And I hold various designations, which all that means is I'm educated. I do the training, the continuing education, so that I can share with you all so you can make an informed decision on your next real estate venture. All right, guys, that's it for today. Have a powerful, productive week. We'll see you next week on another information-packed episode right here, same time, same channel. Take care, bye, guys. Bye.
Thank you for listening to the Ready, Set Real Estate Podcast with Lisa Gillett, the LA Super Agent. Please like, subscribe, and share LA Super Agent